Hey guys, it's Cameron here with Emerson House Buyers. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years. Today's a big day. Today is the 100th episode that I've done for these. So that's exciting, and I appreciate you guys supporting me. There's been times when I thought, why am I doing this? Is it worth it? And I constantly get feedback, emails, texts with questions, or people giving words of encouragement. So I always appreciate that. And guys, I appreciate your support and glad that you're getting something out of this. So today I want to talk about hedge funds and the fees. And we've talked about this before, and I mentioned it before, but it was an article. This guy's name is Simon Lack, and it's called, he's the author of the Hedge Fund Mirage. And essentially what he did a mound of research, and you guys should get the book and read it if you have time, but what he found was that during the 08-09 crash, that hedge funds lost all of their gains over the past 15 years. So that was 15 years of profits gone. And we've talked about this before. Like I said, the hedge funds have these huge fees, and then they underperform the indexes. And if you don't understand what I'm talking about, go and do an Investopedia little research and find out, because I don't have time to get into it. But basically, you want to be in indexes. You don't want to outsmart the market. There are people that make a lot of money to try to outsmart the market, and they cannot do it on a consistent basis. So what's the overall message there? Smart money, that's what they call it on Wall Street. These hedge fund managers and what have you, is not that smart. The boring, dull money is smart. That's the intelligent money that's going to make you a lifelong millionaire, really. I mean, easily, you can become a millionaire. If you start early enough, you invest frequently, even if it's a small amount, you'd be blown away over the long term how quickly it can turn into a lot of money. So I wrote a couple other things down from that article. 66%. So talking about investing, well, what are avenues we can invest in? Well, we have some 401ks, right? Most of us have a job. If you're self-employed, you're going to be a rarity. So there's other options to go through, but most of us have 401ks. Now, 401ks are great. And I just think we got to be cognizant of what you need to do to get those. Most of the people I talk to, I'll say, well, how many years do you have to stay at the company? What do they match? People have no clue. So don't worry about investing in a 401k if you're going to leave next year and you have to be there 5 years to be fully vested. It just doesn't make any sense. You can invest in a Roth IRA. Now, if you have trouble spending and you're one of those people that spends everything they have in an account, then this could be a way, then even if you're not going to match or stay to get the match, then participate. But here's another interesting statistic. 66% of working millennials, those that work, those that are employed, not unemployed, of working millennials have nothing in savings. Nothing. Absolutely nothing. Now, that is via the National Institute on Retirement Security, whatever that means. 66%, so 2/3 have zero. Now, I would hate to even see what the average would be on the 1/3 that has something. I can't believe it's much. But just be cognizant of, now they go on to say 55% of millennials are eligible for these plans. It was more frequent with the Gen Xers and even more frequent with the baby boomers. So they're saying it's a little less frequent. Now, it is uncommon, but if you don't have a 401k sponsor, then open up a Roth or traditional IRA. I recommend a Roth IRA. You can do that. Now, if you're self-employed, there's SEP IRAs and various other 401k options or the like for self-employed individuals. But don't be putting hedge funds or big mutual funds into these accounts. You won't even notice it. They take the fees out over time. They don't take it out at the end of the year, so you see your balance drop. They take them out it's already calculated in the price of the stock or the mutual fund. So you don't even see it. And when you go to sell, you're going to have to pay fees. You just got to be very, very careful. I just thought this was interesting. The hedge fund mirage might be an interesting read for you if you really want to go into this. But I just want to emphasize that again. 15 years of hedge fund profits, of mutual fund profits, were wiped out in 6 months in 08, 09. 15 years it took you to build something up. Could you imagine being a mom or a father, and you have your kids in school, you have a job that you've been working at for 15 years, you're 40 years old, and everything's gone that you've been working for like that? That wouldn't be a very pleasant conversation over dinner. So, why do I tell you this? What you need to do. Go make sure you're investing and saving and you have your plans. I've talked about that in various other videos. Make sure you have devised a plan and you have your avenues. Your 401ks, your Roth IRAs, real estate, there's so many, gold, and whatever you want to get into. But if you're going to do the stocks, and most people will, don't look at mutual funds, look at the index funds. Vanguard is who I use. I promote Vanguard because they're the lowest of the low. They are so cheap in fees and you get the same performance. Why would you ever pay for something? You're paying more for the same product. And actually in the mutual funds case, it's less product. So know what you have, know what account or avenue you're going to use, and be cautious of fees. You don't want to be sitting there. I mean, could you imagine if you had to go through that 15 years you've been working towards something that was gone in 6 months? So hope that was helpful. If it was, let me know. If it wasn't, let me know. Again, this is the 100th episode of that I've been doing this, and I enjoy it, and I really appreciate it, guys. If you liked it, let me know. If you didn't like it, let me know. Always good to hear from you guys when you guys say you enjoyed it and the feedback. So keep it coming, and I'll look to see you for another 100 episodes, guys. Thanks.